Everyone on YouTube talks about living off dividends using US funds like SCHD, VYM, FDVV, or JEPI. But if you are a European investor, you know the struggle. We cannot buy those. Most of us are stuck with UCITS compliant funds, and honestly, some of them are better than others. Today, I am showing you the 5 UCITS ETFs that form my personal passive income goal. I am going to show you the top ones that you can use in your own passive income strategy, and we're covering everything from global players to high yield covered calls, and I'm using the source called Just ETF, which gives a substantive list of all the ETFs that you can buy from Europe. So let's dive in. First up is TDIV. Think of it as the quality king. It doesn't just pick high yields, it picks companies with the cash flow to sustain them. It screens for the top 100 dividend payers globally, but excludes those with a payout ratio over 75%. You're getting Apple, Verizon, and Total Energy, and the fund has yielded a total return of more than 200% since its inception. Now for the data. TDIV offers a current dividend yield of 2.97%. It has maxed the dividend yield at 5.28% in 2023, and it ended 2025 at 4.28%. Its current asset under management are more than 6.7 billion euros, and it has totaled a 12-month total return of 23.3%. So definitely keep this one on your list. Next up is ISPA. If TDIV is about growth, then ISPA is about pure immediate yields. It tracks 100 of the highest paying stocks from the Americas, Europe, and Asia. This is where you get your heavy lifters in financials and utilities. It's a great way to diversify from the S&P 500's tech-heavy concentration. ISPA has yielded more than 350% total return since its inception in about 2009, and now for the data, it currently yields 3.92% in dividend yield, and it has maxed its dividend yield at 5.85% in 2023 and ended 2025 at 5.15%. Its current asset under management are 4.1 billion euros, and it has reached a 12-month total return of 23.8%. Next, if the screen shows, is EHDV. Well, EHDV is a unique because Fidelity, who is the fund manager, uses a proprietary quality score in order to select its dividend companies. They are not just looking at the past, they're looking for dividend aristocrats in the making. It filters for companies with high free cash flow margins and stable returns on equity across Europe. It has totaled about 111% maximum return since its inception. Its current yield is sitting at a high percentage of 4.5%. It has maxed the dividend yield at about 6.1% in 2025. The current asset under management are 360 million euros. It has yielded a 12-month total return of approximately 18.5%. For those who want specific tilt toward higher payers in Europe, I give you EXSH. This is hyper-focused on the 30 highest yielders in the Stocks Europe Index. If you believe the European value rotation is here to stay, this is your weapon for aggressive cash flow from the continent's most established companies. It has yielded a total return of more than 200% since its inception, and currently it sits at a yield of 4.83%, maxing it out in 2025 at more than 7%. The current assets under management are about 900 million euros, and it has totaled an impressive 34.2% total return in the last 12 running months. And then to finish up, the alpha of the group, which is a fund that you may not have heard before, but it's called XY7D. This is the European version of the famous XYLD for the US investors. It uses a covered calls option strategy on the S&P 500 to generate massive monthly income. It would not give you much capital appreciation, as you can see on this graph. It only yielded about 20% total return in pricing return since its inception, but in a flat or in a volatile market, you will get a perfect cash flow that it generates because of its covered call strategy. It is the perfect booster for a portfolio that needs more monthly gas. And the data shows that currently the yield is about more than 10%, and it has been at around 9.5% since inception. It currently holds about 131 million euros in assets under management, and the 12 months total return is about 8.2%. By mixing these 5 ETFs, you are not just investing, you are building a diversified multi-currency income machine. Which of these is your favorite? Drop a comment below with income if you want my full spreadsheet analysis of these 5, and don't forget to hit the like and subscribe for more UCITS focused strategies, and see you in the next one for more deep dives on my more than 190,000 US dollars portfolio that you can see on the screen. See you very soon. Bye bye.